Hey guys, welcome back to my channel and thanks for clicking on this video. In this one, as you can tell, we're going to be talking about the monthly dividend ETF, QYLD. QYLD is popular in the dividend investing community as some people love it and some people seem to hate it. So pretty much I'll be giving my input and analysis on the ETF. If you do like my content, please remember to like and subscribe as it helps the channel grow. Let's begin the video now. So now let's take a look at what we're going to cover in this video. We're going to start off with some background on the ETF, then we'll take a look at some fundamentals of QYLD, then we'll take a look at its dividend history, then we'll end off with some pros and cons, and I'll give my final take on the ETF. Before we talk more about QYLD, we need to understand what a covered call is first. So a covered call is an option strategy used by investors to make money off premiums. It requires the investor to have 100 shares. The investor is able to pick a strike price. Usually the higher the strike price, the less premium the investor receives. If the stock goes above the strike price by a certain amount of time, the investor is obligated to sell their shares at the strike price they picked. The investor still keeps the premium. However, if the stock does not hit the strike price, the investor is returned their shares and also keeps the initial premium. Now let's take a look at the price movement of QYLD. So in one day, it moved 0.18%. In a week, 0.5%. In a month, you would gain 2%. In 6 months, you would actually lose 1%. In a year, you would gain 8.4%. And then in 5 years, it would gain 3%. So as you can see, there's not much price appreciation. Now let's look at the QYLD fund description. QYLD tracks an index that holds NASDAQ 100 stocks and sells call options on those stocks to collect the premiums. The premiums allow for investors to receive their monthly dividends. Now let's take a look at QYLD's summary data. So the brand is GlobalX. The inception date for the ETF is December 12th, 2013. Its legal structure is an open-ended fund. Its expense ratio is 0.6% because it's very actively managed. Its assets under management is right above $3 billion. Its average daily volume is 44.75 million, and its average spread percent is 0.05%. Now let's take a look at QYLD's covered call writing process. So first, QYLD buys all the equities in the NASDAQ 100 index. Next, QYLD sells NASDAQ 100 index options, NDX, to a counterparty that will expire in 1 month. A premium is received in exchange for the sale of the index options. At the end of each month, QYLD seeks to distribute a portion of the income from writing and selling the index option to its shareholders. Finally, at the beginning of each month, this process is rinsed and repeated. Now let's take a look at some market scenarios. There's a down market, there's a flat market, and there's an up market. These are very critical in understanding how QYLD works. A down market and a flat market are pretty similar. In both scenarios, QYLD keeps the premium and doesn't have to sell the shares. However, in an up market, QYLD keeps the premium but has to sell the shares at the strike price. Now we're going to be talking about the reason why people adore this ETF, its high monthly dividend. As of now, the dividend yield sits at a whopping 11.8%. Its annual payout is around $2.65. So for every share you own, you will receive $2.65. That's just insane. So the next question that arises is, what about dividend cuts? Well, this chart puts an end to that question. QYLD has some inconsistencies with paying monthly dividends, but there isn't a major drop, mostly just fluctuations. By looking at this 5-year chart, the only outlier I can see is 15 cents, so it's safe to say that you'll get your dividends. Now let's take a look at the pros and cons. QYLD's biggest pro includes its dividend. QYLD has a high, monthly, and safe dividend. The biggest downside to QYLD is no price appreciation, which I mentioned before. Your income relies purely on dividends. The pros and cons lead me to my next point of whether or not you should buy QYLD. If you're a hardcore dividend investor and are intrigued by the high monthly dividend, then QYLD isn't a bad choice. However, if you're a growth investor, I would personally stay away. Well, that's all I've got for today. I hope you enjoyed the video and learned something new. Make sure to hit the like button to help out with the YouTube algorithm. Also, make sure to subscribe to keep up with all my uploads. Quick reminder to check the description below for additional resources related to finance, investing, and YouTube. Enough said, have a great day, and thanks for watching and stopping by. I'll see you in the next one.